Now imagine this. Silver is breaking records. Investors around the world are watching the charts minute by minute, and suddenly social media explodes with one sentence. COMEX is trying to crush silver prices lower. Is this breaking news? Or just another market rumor? And more importantly, what does this mean for you, your money, and the future of silver? Stay with me till the end of this video because by the time we're done, you'll see the silver market in a way most people never do. Silver has always been more than just a metal. It's money, it's industry, it's protection, and for some people, it's rebellion against the financial system. Every time silver starts moving fast, the same questions come back. Who is controlling the price? Why does silver behave differently from gold? And why does COMEX always get blamed when silver becomes too hot to handle? Right now, silver prices are extremely volatile. One day it feels unstoppable, the next day it suddenly pulls back. And that's when these headlines appear. COMEX wants silver lower. But before we jump to conclusions, we need to slow down, breathe, and look at the full picture. Because markets don't move on emotions. They move on structure, incentives, and power. COMEX, the commodity exchange, is not some secret room full of people pressing buttons to crash prices. It's a futures exchange. That means most of the silver traded there is paper silver, not physical bars moving from one place to another. Futures markets exist for price discovery, hedging, and liquidity. But here's the key point. Paper markets can influence perception, and perception can move prices faster than reality. This is where confusion begins. When silver rises too fast, volatility increases. When volatility increases, COMEX and CME often raise margin requirements. Now listen carefully. This is important. Raising margin requirements means traders need more money to hold their positions. Weak hands get shaken out. Leverage gets reduced. Prices can pull back. To some people, that looks like manipulation. To exchanges, it looks like risk management. So the real question is not, is COMEX crushing silver? The real question is, who benefits when silver cools down, and who gets hurt? Banks, hedge funds, industrial users, miners, retail investors, everyone has a different reason to care about silver prices. Large institutions don't like chaos. They don't like sudden explosions in price. They prefer controlled moves, predictable markets, and stable liquidity. Retail investors, on the other hand, often enter emotionally. They buy breakouts. They panic on drops. And when prices fall fast, they look for someone to blame. If you're still watching right now, you're already ahead of most people, because most never stop to ask why. Quick moment. If this topic matters to you, drop a comment right now saying silver, so I know you're watching closely. And stay with me, because this gets much deeper. Now let's talk about history. Silver has a long history of manipulation cases, and that's not a conspiracy theory. That's a legal fact. Banks have paid fines for spoofing, for placing fake orders, for influencing short-term price moves. But here's the uncomfortable truth. Those cases were specific, limited, and punished. They don't automatically mean every price drop today is manipulation. Markets are messy. Markets overreact. Markets correct. Silver is especially emotional because it sits between gold and industrial metals. It's half money, half commodity. When inflation fears rise, silver rallies. When recession fears rise, silver can drop. When interest rates change expectations, silver reacts violently. So when you see silver pull back after a strong rally, that doesn't automatically mean someone is crushing it. Sometimes it means the market is catching its breath. But here's where things get interesting. The physical silver market is tight. Industrial demand is rising. Solar panels, electric vehicles, electronics, all need silver. Supply growth is limited. Mining is expensive. New discoveries are rare. So we have a strange situation. Strong long-term fundamentals, but violent short-term price swings. That gap between paper silver and physical silver is what fuels these COMEX narratives. Paper markets can sell silver that doesn't physically exist. That's legal. That's how futures work. But when too many paper contracts exist compared to real metal, trust becomes fragile. And when trust breaks, prices don't just move, they explode. This is why silver scares the system more than gold. Gold is owned by central banks, silver is owned by the people. If you're finding value so far, make sure you stay till the end, because I'm going to explain what really happens next and how smart investors think during moments like this. Take a second right now. If you're enjoying this breakdown, hit like. It helps more than you think, and it tells the algorithm this conversation matters. Now, let's address the headline directly. Is COMEX trying to crush silver prices lower? There is no verified evidence that COMEX is deliberately trying to push silver down. What is happening is volatility control. And volatility control often feels like suppression to people on the wrong side of the trade. Think of it like this. When a car goes too fast on a dangerous road, brakes get applied. That doesn't mean the road hates the car. Short-term traders want speed. Exchanges want survival. But here's the part nobody talks about enough. Every artificial slowdown builds pressure, and pressure doesn't disappear. It transfers. Silver doesn't forget fundamentals. If prices are pushed down while physical demand stays strong, inventories drain, premiums rise. Eventually, paper prices must reconnect with reality. That's why long-term silver investors don't panic on drops. They watch structure, not headlines. Let me know in the comments, are you watching silver short-term or long-term? There's no right answer, but awareness matters. As we move forward from here, the silver market is entering a critical phase. Either volatility cools and price consolidates, or pressure builds quietly under the surface. And history tells us, when silver finally moves, it doesn't ask for permission. So before you believe any breaking news headline, ask yourself 3 questions. Who is saying this? What do they gain if you panic? And what does the data actually show? Because in markets, fear spreads faster than truth. Stay calm, stay informed, and never let a headline think for you. Stay with me till the very end of this channel, because upcoming videos will go deeper into silver price targets, physical versus paper supply, and what smart money watches when everyone else is distracted. Subscribe if you want clarity, not noise. And remember this one thing, silver doesn't move when people expect it to. It moves when pressure becomes impossible to contain. Right now, as you're watching this, silver is once again doing what it has always done best, confusing people, frustrating traders, and exposing how emotional financial markets really are. One moment, the price looks unstoppable, headlines scream new highs, and then suddenly the momentum slows, prices pull back, and social media explodes with fear. And that's when the same accusation comes back louder than ever, that COMEX is stepping in, that someone is trying to crush silver prices lower, that the game is rigged. But before you believe any of that, let's slow this down, because understanding silver requires patience, context, and the ability to ignore noise. Silver is not just another asset. It's not a tech stock. It's not crypto, and it's not even gold. Silver lives in a strange middle ground. It's money and it's industrial fuel at the same time. It reacts to inflation, interest rates, economic fear, industrial growth, and even geopolitics. That makes it volatile, emotional, and very easy to misunderstand. When price moves fast, people look for villains. When price falls, people look for manipulation. But markets don't work on feelings. They work on systems. COMEX is a futures exchange. That means it deals mostly in contracts, not physical metal. Futures exist so producers can hedge, so buyers can lock in prices, and so liquidity can exist in the market. But here's where most people get lost. Paper markets don't need physical silver to trade. They need confidence. And confidence is fragile when volatility rises. When silver moves too fast, exchanges respond the only way they know how, by controlling risk. That usually means higher margins, tighter rules, and less leverage. And every time that happens, weaker hands are forced out. To someone holding a leveraged long position, that feels like an attack. To the exchange, it feels like survival. Now pause for a second and really think about this. If COMEX truly wanted to destroy silver prices, why would silver still be one of the most volatile and explosive assets in history? Why would it keep returning again and again, breaking resistance, shaking markets, and refusing to stay quiet? Suppression only works when demand disappears, and demand for silver has never disappeared. Industrial demand is rising quietly in the background. Solar energy, electric vehicles, medical equipment, electronics, all of it depends on silver. And unlike paper contracts, factories don't run on theories. They run on metal. At the same time, mining supply is not growing fast enough to keep up. New discoveries are rare. Costs are rising. Environmental regulations are tightening. This is not a market drowning in excess supply. This is a market balancing on pressure. That pressure doesn't vanish just because price pulls back for a few weeks or months. Pressure builds. If you're still watching, you already understand something most people don't. Silver doesn't move in straight lines. It never has. It moves in violent waves, long periods of boredom followed by moments of chaos. And every time chaos appears, the same accusations return. But accusations don't change fundamentals. Here's something important that almost nobody tells retail investors. Futures markets exaggerate moves in both directions. When optimism is high, leverage amplifies upside. When fear appears, leverage amplifies downside. That doesn't require manipulation. It requires human emotion. Greed on the way up, panic on the way down, and panic spreads faster than logic. Take a moment right now and ask yourself honestly, are you reacting to price, or are you reacting to headlines? Because the difference between successful investors and frustrated ones is not intelligence. It's emotional control. If this perspective is helping you think more clearly, stay with me. And if you want to be part of this conversation long-term, make sure you're subscribed. This channel is about understanding markets, not chasing noise. Let's talk about the idea of price crushing. Crushing implies intention. It implies coordination. It implies control. But markets this large don't move because of one decision. They move because millions of decisions collide at the same time. When silver becomes crowded, when everyone is on one side of the trade, markets naturally correct. That's not evil. That's math. But here's where the story gets deeper. Paper silver and physical silver are not the same thing. Paper silver can be created instantly. Physical silver cannot. When paper selling pushes prices lower while physical demand remains strong, a disconnect forms. And disconnects don't last forever. Either demand fades or price catches up. History shows us which one usually wins. Every major silver rally has been preceded by doubt, frustration, and disbelief. People give up. They sell. They swear they're done with silver forever. And then suddenly, without warning, silver moves violently higher and leaves them behind. Not because COMEX allowed it, but because fundamentals forced it. This is why smart investors zoom out. They don't obsess over every candle. They don't panic over every rumor. They watch inventory levels. They watch industrial demand. They watch macro trends. They watch trust in financial systems. And right now, trust is fragile. Debt levels are high. Currencies are under pressure. Inflation fears haven't disappeared. They've just gone quiet. Interest rates remain a wild card, and every one of these factors feeds directly into silver's long-term story. So when someone says COMEX is trying to crush silver, the real question should be, crush it for how long, and at what cost? Because you can delay reality, but you can't delete it. Take a second here. If you've made it this far, you're clearly serious about understanding silver. Drop a quick comment, even just a word, so I know you're here. Engagement matters more than you think, and it helps this information reach people who need it. Now imagine this scenario. Price is pushed lower temporarily. Retail traders panic and sell. Headlines declare silver dead. Meanwhile, physical buyers quietly accumulate. Industrial users lock in supply. Inventories slowly drain. Then one day, the pressure becomes visible. Premiums rise, deliveries tighten. Suddenly, paper promises are questioned. That's when things change fast. This isn't speculation. This is how commodity markets have behaved for decades. Oil, copper, nickel, even gold. Suppression narratives always appear right before structural shifts. Silver is patient. Humans are not. And that impatience is what markets exploit. If you're looking for a villain, look at leverage. Look at overconfidence. Look at emotional trading. Those are far more powerful than any exchange rule. COMEX doesn't need to crush silver. Silver does a perfectly good job of shaking people out on its own. But here's the twist most people miss. Every shakeout strengthens the base. Every panic sale transfers metal from weak hands to strong ones. Every headline screaming fear builds the foundation for the next move. So the next time you see breaking news in all caps, pause. Ask yourself who benefits from urgency, because urgency is the enemy of good decisions. We're entering a period where silver will continue to test patience. Volatility will remain, rumors will increase, and narratives will get louder. That's usually what happens before clarity arrives. If you want clarity instead of chaos, stay connected. This channel isn't about hype. It's about understanding how the game actually works. And remember this, markets reward those who can stay calm, while others lose control. Silver doesn't move when everyone agrees. It moves when pressure becomes unavoidable. Stay sharp, stay informed, and don't let fear make decisions for you.